Good morning, traders. Paul here with GammaEdge. Today is Thursday, the 23rd of February. Let's get started. Pause your players here. Read to the bottom. If you agree, hit that play button. Taking a look at the summary for today, short-term continuation day. What this means is that we have the CT, the cumulative tick, lower than the prior days, and we are in a railroad track down continuation pattern. Again, 3 days in the running here. Could reverse. These things typically only last 3 to 4 days on average, and so this would be a time frame to be wary of, a potential reversal to the upside. We did get a long-term bearish confirmation. What we call the ribbon has confirmed a inversion to the bearish side, and when we see something like that, our bias starts to flip and selling the rips as opposed to being bullish in overall content. Now, that's not a universal stance, but it just gives us another data point on the horizon for how we should be positioning and what the bias is. Market breadth, as viewed by our 52-week new high, new low breadth indicator, is showing 2 consecutive days of the new lows outpacing the new highs. This is a character change. We only have 3 down days in 2023, so be aware of this, that sentiment is changing, risk is coming off the table, independent of the potential of a bounce, and just be aware that in a broad paintbrush, things are dropping. The right goalpost, as we measure by our positive gamma exposure, has dropped to 4,200, and we think this is due in part to all the OTM call speculators. Those are the folks who are thinking that we're going to move up and we're going to be going to 4,300. That's not happening, and so they're becoming a little more realistic here and are closing those 4,300s and opening the 4,200s. The left goalpost, minus GEX, has moved up to 4,000. We alerted you to this on Tuesday, that this has been the modus operandi for the 0DT and end-of-week crowd. And here we are on Thursday, and sure enough, we've been edging our way up from 3,800. We fully expect 4,000 to remain through today and tomorrow, and then as it comes off, we'll return next Monday, probably back to 3,800 or 3,900. Just be aware of that. We look to be kind of concentrating in these areas. We are significantly below transitions, and we think that this could point us back to a mean reversion towards those neutral zones of the transition range. So we're looking at really the 40.25, maybe 40.20 as being a likely area, and that could extend all the way up to 40.70, although there's a lot of structural differences to get up above the 40.30 range. So we're going to call the 4,000 to 40.30 as a likely playing zone, but just be aware there are little asterisks that could push us higher or keep us from closing above 4,000. For the 0DTE crowd, charm flows in the morning session indicate a weaker early morning structure where we have negative charm flows, and we think that 40.10 is going to be a very, very sensitive upside target today, Thursday, and 39.50 being very sensitive as a downside target. We think a close above 40.10 would be very bullish, and it would be a good setup for Friday and into the weekend, but we'll just have to see how the day materializes. The cumulative tick, no lines, no annotations whatsoever. A couple things should be apparent to you. We're down. We've closed at the low of the day yesterday in the ARCX. Other ticks are not necessarily confirming this. The Russell 2000 RLC tick indicator actually is pretty strong. So small caps are catching a bid, and people are not running away with their arms up in the air. This is the trigger that does confirm more of a downside bearishness, and so just want everyone to be aware of that we've had this downside movement, which is pulling everything down. And when we see something like this happens, this is a lagging indicator. It's not actionable in the sense that you're going to make a lot of profits here, but just be aware sentiment is changing. Note that the ribbon is horizontal, more or less, and that means we've been up and down, up and down. The fact that it's narrowing and pointed down tells you you are in a longer-term sentiment change. You can read more about this in a Substack publication that we did by just going to this link here. When we take a look at the market model on the shortest of term time frames, short term, you can see we've been in now, we've completed day 3. This is a CT down continuation day, some stats that are there. It started a few days ago. Same thing with the railroad track down. It's another way to look at this. Has a little better statistics here, and we are down there. Note both of these typically terminate in the 3 to 4 day range, so be aware that we are mindful of a reversal upward. That being said, if you took these signals, you were rewarded. We alerted you to this. We took the signals in our model portfolio, and we'll publish all of that this weekend. Taking a look at the long-term market model, like I said, we had this reversal. This doesn't occur often. We were long in the tooth. We had been narrowing for some time. We alerted you to all of this back on 2.6 and 2.9, where the negative slope started changing and we started getting this convergence. And then as the CT goes above or below, you get noise. This is the battle that is being waged by the bulls and the bears. And then finally, over the last couple of days, the bears won, and that's pulled everything down. Again, a lagging indicator, but can help you in a longer term confirmation of which side of the table you should be on. We have back tested this extensively, and if you don't listen to these signals, you will pay for it, guaranteed. That's our line in the sand on the CT. As far as the SPX is concerned, all the primary levels are dropping. I won't read all of this to you. Pause your player, read the notes, the bubble ups. We actually are seeing a rise up in minus gex and a collapse of plus gex. When we see a narrowing of the ranges, we can break in either direction, but because the bias is downward and because of just what happens, the mechanics of what happens when minus gex, when we see a rise in that, it means more puts are going in and they're closer to spot. And when they're closer to spot, you're taking advantage of downside convexity, which is gamma. So just be aware of that. Expected move open, high, low, close is really unchanged for the week. This is a conservative estimate, and selling premium above this area or below this area, if you can get it, might not be a bad thing to do. PM settled complex, again, a lot of notes here. Pause your players, read. A couple things you just want to call out. The transition range, we're significantly below this. The 4,000 minus gex level in the PM complex, it's unusual to be below this. And so this is why we do think there's the potential to pull upwards. That 4,000 strike is important. It has some pretty serious implications in the money versus the out of money conditions. Remember, above the yellow line, we have puts that are in the money. Below the yellow line, we have calls that are in the money. And you can look at the relative balance. Although time is not inferred in open interest, it does give you an indication of just what is in play. Why that's important, when you take a look at the charm chart, and this is a forward estimate of what we think the next few days look like. Thursday, 40.10 and 39.50 really become key areas to pay attention to for an in the money, out of the money dominance here, hence why you see the sign changes. And are we getting longer or are we getting shorter in our positioning? And that has, we believe, in the do nothing, sit on your hands condition that will impact how dealers have to respond. And then Friday, a little bit wider here. We're looking at 40.50 on the upside here, 3,900 to the downside. And these will get smaller and smaller and smaller as the day progresses, and this will continue to grow. So we do see some potential in the short term to bounce here. Now, the question is just how strong that bounce will be and how high up will it go. The 0 DTE, here's that 40.10 strike. Made some notes in the Discord. I would urge everyone to go take a look at that. The key takeaway for you, though, is that in looking at this, the 4005 is a parking spot underneath that will still keep the 0 DTEs in the money, and that will be downside pressure. It'll be weak because we'll be sitting right there, but just note as we limit into the end of the day, the 4010 is going to be a pretty dominant level. It's just going to continue to grow in how it impacts the rate of change of the deltas. Taking a look at the 1 DTE, 4,000, of course the 4010 is gone. Tomorrow you can see the range that we're looking at. We have a large amount of net negative gamma exposing or vaporizing on Friday, expiring. And that opens up the door for this range to really become a key level or a key playing zone for tomorrow. So we are looking at this 4,005, 4,010 today into the close. That would be actually an area where we could park with very limited overnight exposure tonight, and then that would set up the tables for possibly running up to 40.50, if not even higher tomorrow. Now, taking a look at the combo complex, which is everything, it's the AM and the PMs, you can see the transition range. You can see this 40.30, 40.35 area. There is a little parking spot. We believe it's going to be very difficult to make progress above 40.35 today and tomorrow unless we see the out-of-the-money call speculators step up. They're not stepping up. We have a pocket here at 40.30. This has been here for a while. We've been talking about this. We think it's very difficult to make progress above 40.30 and have it stick into the close. So just be aware of that not likely, but certainly is present. Now, to the downside, this is very interesting. The in-the-money call the in-the-money call holders are holding fast here. And what this means is that the put speculators are not dominating the air in the room down here. Now, this is a big deal because this is basically saying there is no downside speculation below 39.50. So this really points to a range for the next day or two of 39.50 to 40.30. We think this is real key and want everyone to pay attention to that. Now, we are below transition. We would like to see us get up into transition, but there's no guarantees and there's really no impetus to do that for now. If we do move into transition, we think that 40.25, 40.30 in the combo complex would make sense. It's an area of delta zero transition, and it's also an area of the gamma transition, fairly strong gamma transitions too. So just be aware of that. We are watchful or mindful of this, but if we don't get above 4,000, and again, being below minus GEX is very unusual in the combo complex like this. So we do expect some form of either the mean reversion above it and getting towards transition, or we will see more calls vaporize and puts, OTM puts going in, speculating to the downside and growing the 39.50 and below. We would be watching for deltas to vaporize on the call side, and then the speculative puts start dominating the air in the room. And we're not seeing that at this point, which is really good. Final slide here. Right goalpost 4,200. You can see fairly dominant up there. It's getting smaller. Certainly is definitely smaller than what it's been. Part of that is because gamma, spot price and gamma are interrelated, and as we move down, that takes some of the magnitude off of this, and it does embolden the bears. And you can see that the put structure is improving. Not enough to flip things. So 4,000 minus GEX here. We're right below that here. The first upside bogey as far as this is concerned and transition, 40.30. If we can clear 40.30, we're in pretty good shape to now make a run at the JPM short strikes at 40.65. If we can get above that, then all bets are off and we could certainly move north. If we can't clear 4,000, I think the bears remain in control. If we land in the 4,000 to 40.30 range, today, tomorrow, we're above some of the pressure. We're relieving some of the pressure, but we're still not, the bears are still in control. We really need to take that 40-30 range that you see here and be able to have any type of opportunity to push north and make a run at points higher there. So with that, I will bid you farewell. If you have any questions, comments, go to this link in the upper right-hand corner. There's a pricing tab. Fill out the blanks. Come on in. Ask your questions. A lot of great traders. A lot of good, knowledgeable folks, and they can help you get oriented with what we're seeing here and how to apply it to your training. It's all a big educational process. Follow us on Twitter at GammaEdge with an S, and then here on YouTube, please. Two things. One, if you like today's content, smash that like button. That helps me give the right information to you. It gives me immediate feedback. And then, of course, subscribe to us because Taylor, myself, and Michael are posting videos, and we want you to see what we're seeing and learn how to apply this to your trading and investing. So with that, I bid you farewell. Hope to see you in the Discord. Make it a great Thursday. Thanks, everyone.